You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Monday, June 10th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Monday. The first thing to know is Trump suspends tariffs on Mexico. U.S. President Donald Trump announced a deal with Mexico, putting a hold on 5% tariffs on Mexican goods that had been set to go into effect on Monday. Trump, who threatened increasing tariffs on Mexico if the country didn't work harder to stop immigrants crossing into the U.S., said he now has full confidence that Mexico will be more cooperative. The Mexican peso rallied 2% against the dollar on the news, though few details of the agreement were released, including whether Mexico has promised to purchase more U.S. agricultural products or beef up policing its southern border with Guatemala. Trump indicated implementing tariffs remain an option if cooperation does not proceed as planned, but emphasized that he does not think they'll be necessary. The second thing to note today is global stocks celebrate the U.S.-Mexico deal. Global equities registered solid gains on Monday as markets applauded Trump's decision to suspend tariffs on Mexican goods. Though the U.S. remains locked in a trade dispute with China, the deal with Mexico provided a sigh of relief for markets concerned that Trump's aggressive trade tactics could result in a global recession. Asian and European shares were up around 1%, though Australian, German, and Swiss stock markets were closed for a holiday. The third thing to know today is the U.S.-China trade deal is in limbo until the end of June. U.S. Treasury Secretary Steven Mnuchin told CNBC in an interview that Trump would decide whether tariffs on China are appropriate after meeting with Chinese President Xi Jinping at the G20 summit scheduled for the end of the month. Mnuchin stated that the president was perfectly happy to hit Beijing with new tariffs if the meeting doesn't go well. G20 finance leaders who met over the weekend warned that intensifying trade and geopolitical tensions were the biggest risk to the stabilization of global growth. Data released overnight showed that China's exports unexpectedly returned to growth, although some analysts suspect that manufacturers may have increased shipments to avoid the most recent round of tariffs on $300 billion of Chinese goods. Chinese imports, however, registered their largest decline in nearly 3 years, providing another sign of weak domestic demand. The fourth thing to know is United Technologies and Raytheon are to merge. United Technologies and Raytheon agreed to a merger that would create an aerospace and defense giant worth around $121 billion the sector's largest deal ever. The companies are likely to argue that their business overlap is limited in order to avoid critiques from antitrust regulators, although Boeing, Airbus, and the Pentagon are expected to raise objections. The deal is expected to close in the first half of 2020 once United Technologies completes the spin-off of its Carrier air conditioner and Otis elevator businesses. And the fifth thing to know is oil prices rise on Saudi-Russian deal pledge. Oil prices climbed further on Monday as a pledge from Saudi Arabia and Russia to extend coordination action to balance markets, a drop in U.S. drilling activity, and the deal between the U.S. and Mexico outweighed concerns over the global economy. Saudi Energy Minister Khalid Al-Faleh said it was close to an agreement to extend the production cut agreement between OPEC and non-member allies led by Russia, while Russian counterpart Alexander Novak said they'd agree to take coordinated action. Baker Hughes data released late Friday also showed that the number of U.S. working rigs, considered an indicator of future output, fell to the least since February 2018, the previous week. U.S. crude oil futures gained 30 cents, or 0.6%, to $54.29 by 5 a.m. Eastern, while Brent oil traded up 29 cents, or 0.5%, to $63.58. Our next story today is from finance.yahoo.com. That's Yahoo Finance. China exports grow despite U.S. tariffs, but imports slump the most in nearly 3 years. China's exports unexpectedly returned to growth in May despite higher U.S. tariffs, but imports fell the most in nearly 3 years, in a further sign of weak domestic demand that could prompt Beijing to step up stimulus measures. Some analysts suspect Chinese exporters may have rushed out shipments to the United States to avoid new tariffs on $300 billion of goods that President Donald Trump is threatening to impose in a rapidly escalating trade dispute. But Monday's better-than-expected export data is unlikely to ease fears that a longer and costlier U.S. trade war may be no longer avoidable, pushing the global economy towards recession. China's May exports rose 1.1% from a year earlier, compared with market expectations for a modest decline, customs data showed. We expect export growth to remain positive in June, likely supported by continued front-loading of U.S.-bound exports, but it should then tumble in the third quarter when we expect the threatened tariffs to be imposed, economists at Nomura said in a note to clients. Therefore, we believe Beijing will likely step up its stimulus measures to stabilize financial markets and growth. Business distortions related to April's cuts in the value-added tax, VAT, may also have eased, helping export readings, Nomura added. Analysts polled by Reuters had expected May shipments from the world's largest exporter to have fallen 3.8% from a year earlier, after a contraction of 2.7% in April. And that, ladies and gentlemen, is news you can use for today, Monday, June 10th, 2019. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.